Hello, everyone. Your Excellencies, ladies and gentlemen, welcome to the World Government Summit COVID-19 webinar series. I take great pleasure today in having our session titled Recession or Recovery? What can we expect from the global economy post-COVID-19? Without further ado, I'd like to introduce our four esteemed panelists for today who bring a wide variety of insights and are thought leaders in their fields. Kevin O'Leary, businessman and global investor. Alain Bejjani, Chief Executive Officer of Majid Al Futtaim Holding, and Sarah Ewan, Managing Director and Chief Economist of Europe and Americas Standard Chartered Bank. And lastly, without further ado, Hadley Gamble, news anchor and international correspondent for CNBC. I leave the floor to you, Hadley, and I hope everyone has a lovely session.
Fantastic, great stuff, Amal. Thank you so much to the World Government Summit. Your Excellencies, ladies and gentlemen, once again, thank you all so much for joining us, my esteemed panelists. I want to get right to it. We are talking about what is happening in the global economy today, recession, depression, what the recovery is going to look like, and frankly, what we can expect from the economy a little bit down the road. This is a post-COVID-19 economy, but one in which we all understand at this point we're going to have to be living with for quite some time. I want to take this opportunity to do a quick round robin with the panelists and get your 2 cents worth, not just on what we're facing, but much more specifically, who are the winners and why? Kevin, I'm going to start with you. Kevin, I'm going to ask you to repeat that. I'm so sorry to interrupt you. I think your audio may be off.
Sorry, you're right.
One more time.
There we go, sorry. The winners are going to be the companies that are now enabling global businesses to do something they were never intending to do. They were forced into working remotely, not only with their own employees, with their customers and their supply chains. And that was unanticipated, not just in the US, but globally. And it doesn't matter whether you're a Coca-Cola or you're a small domestic business in any country, you've been forced to work in a way that you would have never intended and would have never risked doing. Having done it now for almost 4 months, what many of these companies have found are some remarkable efficiencies that they would have never risked taking. So you have a look now at the companies that have provided the technology even we're using now is a household name, Zoom, for example, or WebEx from Cisco or whatever. But not only that, all e-commerce, and I'll give you a stat that's shocking, the largest markets on earth, the European, the Asian, even the Middle East, were about 16.2% in e-commerce going into this pandemic, ex-automotive. Today, in the US, it's reached 25% in 90 days. What should have taken 5 years, according to analysts, took 90 days. And that means every company involved in helping that happen, including grandmothers using cell phones to order groceries, which would have never done that in any country. And so there's an index of about 58 of those companies. I've been working on it with others. You can go online and see it in OGIG. They are all giant internet companies. They represent Asian, North American. And as a result, those market capitalizations in the last 4 months, or since the beginning of the year, since January, are up 20%. So people are worried about the stock market, and yet many companies that are providing for the new economy have gone up dramatically, even in this volatile time.
Alan, do you want to weigh in on that one? Because obviously you're coming at this from very much the grassroots level. And this isn't just about the potential winners for you. It's also about, frankly, the perception of the new reality when it comes to consumers and how they're going to continue to buy and what they're going to want and how they're going to want it.
Absolutely. I mean, I agree with Kevin. I would add that the winners in reality are not, I mean, this is going to evolve. So whomever is winning today may not be actually the one winning in a few months' time or in a year's time. We still don't know how the future is going to look like. But I would say that broadly, the winners are going to be those who take care of their people, who actually have built enough liquidity buffers and have the ability to preserve their cash flow. this is going to be conditional on how things will evolve in the future. And I agree, this pandemic is accelerating things. We kind of live in 2025 suddenly in the span of 30 days with the move to work from home, to all of what we're seeing in terms of digital acceleration and all those who are helping getting there. But this is going to be a marathon. This is going to be a long haul in terms of how do we get out of it? What is it going to mean? And once we are out of the health issue per se, which is going to take some time, I mean, that's not going to be for tomorrow. We're also going to be dealing with a much bigger issue, which is going to be the financial impact and ability of people to come back to consumption. What will that mean? How will that happen? And so on and so forth.
I think, Sarah, you're best placed, frankly, to talk about exactly what that's going to mean from the economic side of things in terms of health of the banks, health of these economies, and the ability of policymakers to do what they need to do. Because at the end of the day, you can't legislate growth.
That's absolutely right. And policymakers have already been very, very proactive. I think that that's one positive that we've seen compared to, for example, the global financial crisis, where it took a while before policymakers understood the severity of the situation. Here, it's been very upfront, it's been very clear. And we've seen central banks acting very aggressively to ease interest rates lower, move interest rates more negative, expand QE, and commit to doing whatever it takes. Whether they're able to or not is another question. From the fiscal side as well, governments have clearly seen that this is not the time to be penny pinching, and this is the sort of crisis that just requires an immediate and substantial injection of funds. We've certainly seen that from the US. Globally, we've seen it as well. Some countries have lagged behind, and obviously coming out of this crisis, the focus is going to be on debt. Where are the largest debts and how are they going to be funded? How are they going to be financed? Are we likely, therefore, to see interest rates having to stay low for a prolonged period of time? I think that is going to be the case. But the immediate question that policymakers are having to deal with is, how do you mitigate the worst impact of what is clearly going to be a very substantial global recession, the largest that we've seen certainly since the financial crisis in terms of the global economy, if not in the past 70 plus years or so.
Kevin, I want you to weigh in on that one, because as a global investor, who do you see as a government getting it right? Is Steven Mnuchin and President Trump getting it right? Because we're seeing the market not necessarily reflecting what's happening in the actual real today.
Well, you know, the government that got it right and has performed best, but has the benefit of a smaller population, is the Swiss government with their canton system. They only had 38 cases yesterday. The entire country is open. Everything is open with new protocols on social distancing and wearing of masks, etc. But they brought their economy back in basically 68 days. Now, they went to a total lockdown, and they have a population of 8.2 million, of which 1 million are foreigners. They have come back the fastest, even better than South Korea. Obviously, the Swiss are a combination of allowing freedoms that other societies have, but with a social conscience that no other country has. When the government asks you to do something in Switzerland, you basically do it. That's not the same in many other democracies, including the United States. Here where I am, quarantined in Miami, we are still in total shutdown. We have cases breaking out. There's nobody on the beaches. That's unprecedented. As a result, large sharks swim within feet of my front door now, which had never happened before. That's just an interesting tidbit. But, you know, the country is not coming back as planned. It's a lot slower. It's at least 2 months behind Europe and, you know, maybe 4 or 5 months behind China, which is opening up as well. But fund flows are starting to show that I'm not as pessimistic about the global recession. I'll tell you why. This is a self-imposed recession that occurred over a 3-week period. The world shut its economies down. Recessions that last a long time, the average length, a year and a half, are driven by a slow grind, a slow contraction of business globally. That didn't happen here. This happened in basically 48 hours. So the pent-up demand is still there. Now, assuming we do get some kind of inoculation or therapeutic in the next 18 months, which I think most people are optimistic for, because the level of science acceleration since SARS, we've got to remember SARS was 11 years ago. We have now a quantum of a 5 to 6x more power in just digital processing for new science and medicines and artificial intelligence, et cetera. If it's not a therapeutic, it may be one of the 99 different initiatives for vaccines, and then the manufacturing of a couple of billion doses to give herd inoculation. When you build that into your thesis of investing, you're starting to see why both European and Asian markets and North American markets are holding within 5 to 10% of their highs. People are optimistic that this recession will be short and will be replaced by, almost a knee-jerk reaction back to the global business that was occurring prior to being shut down 90 days ago.
How do you plan for that, Alain? Because as someone who is managing more malls in the region than anyone across the Middle East and North Africa, you've got access to consumer data like no one else in this part of the world. So you know how people are buying, what they're buying and what they're not buying and what they're willing to do. How do you manage the fear factor here? Because as Kevin was saying, we're learning much more about this infection every single day, about this disease every single day, but we're still not at the point of a cure. And there's a lot of fear out there, and you've got a plan around that.
Absolutely. I mean, I'm less worried about the future of the health issue in this transition period between now and when a vaccine is found. We're going to live with the virus, and I think medicine is getting much better at dealing with it, even though you still have cases. We have a better understanding of this virus. Our ability, our medical protocol are much better in terms and effective in terms of dealing with it. So I'm not so much worried about that. But I think the level of awareness is very different. And basically, we know until today the best way to deal with it is simply wearing a mask and social distancing. And I agree that some countries are doing much better than others and will do much better than others because of either social construct or discipline. But actually, the big issue that we are facing, that we're going to face, and we're starting to see the impact of that, is one, governments are dealing, I think, in relatively a right way, whatever that's happening, by actually taking some measures that is needed, but that we might regret into the future. I think the debt issue is a fact. I think that governments are going to soak up liquidity from the market going forward in a huge way. This is a reality, I think, that we're going to be facing. At the same time, we have 36 million Americans that are actually unemployed, and we have the same issue across the board that you're going to see that's unraveling across multiple jurisdictions. This is also another economic reality that drives consumption and that drives people behavior. When we look at our consumers across all of the 17 markets that you operate in here, we operate in this region, people are telling us the following. One is, we're going to continue to consume, yes, but we're going to be much more value driven, and you're going to have much less disposable income, and you're going to be trying to save more because we don't know what the future is going to look like. So there is fear. There is a fear about the future. We need to get people back to trust. So trust, I think, is a very important underlying factor going forward. Trust in each other, that we're not carrier of death, if you want, when we are meeting in person, moving into, I would say, this contactless economy, but also at the same time, we need to bring back trust in government, trust in the healthcare system, and people trusting that they actually have a future, so they can go back to what Kevin was mentioning in terms of this was a knee-jerk reaction, but basically when you open back, there is this pent-up demand. In order for that,
it's also about managing the psychology, right? Like, it's managing the psychology of your
absolutely. But it's very difficult to manage psychology where someone has lost their jobs or half of their income. So the point is, the disposable income is going to be very different, and that's going to impact us at least in the coming 18 to 24 months.
Sarah, weigh in on this one, because when we think about this more broadly with respect to liquidity and respect to the banks, I mean, so many sectors are under a great deal of pressure at this point because of outstanding loans, and the worry, of course, that they're not going to be able to make things match, make their books balance in the next 6 to 12 months. Where do you see us headed in the short term?
Yes, I think, as I mentioned earlier, companies went into this crisis with pretty high levels of debt, and revenues have, in many cases, I mean, obviously, Kevin talked about the winners, but where companies are losers, revenues have fallen off a cliff. So I think that unfortunately we are going to be seeing some shakeouts in certain sectors. I think we're pretty much all aware of where the real strains are in terms of travel. Tourism is starting to make a comeback, but for airlines, this is a particularly difficult time. From the policymaker perspective, this really increases the need to keep interest rates very low, to, as far as possible, ensure that funding is getting out to companies where it's required, and that governments are operating hand in hand with central banks to ensure that there is readily available low-cost funding. If that's, so that when we come out of the downturn, which we think is going to be in the second half of this year, and we're already seeing some signs of it now, companies are in a better position to, pick up traction as well. Another comment, I think, in terms of, how we move out of this downturn, what the world looks like after the crisis, really, to a certain extent, relies on what's happened in the labour market. We've seen some countries, particularly across Europe, who have tried to make sure that companies are able to hang on to their employees. You have short-time working, or, for example, in the UK, the furlough scheme, where the government has been covering salaries, 80% of salaries for workers who are furloughed. In those countries, it should be a sort of swifter return to normality for those sectors that are survivors. I think where you've not seen those policies in place, then maybe the recovery, the adjustment is going to take longer.
Kevin, walk me through in terms of those opportunities. I mean, we were talking about the sovereigns and what you're seeing in terms of those fund flows. The Sovereign Wealth Fund in Saudi Arabia, for example, has taken this as an opportunity to buy. And frankly, that's a country that's in the midst now of, they've been admitted of a serious economic crisis off the back of what we've seen happening with oil prices. How do you see these things shaking out in the next year or so? It's early days, I get it.
No, it is early days, but there's going to be some sectoral changes in terms of sovereign fund flows. I'll give you an example. And this is the same issue whether you're in London, Geneva, Riyadh, Dubai, it doesn't matter. Having all these businesses and individuals forced to work remotely now for an extended period of time, and having some success in being able to do it, because this pandemic came at a time with unprecedented technology to communicate, not just through social media, but by vehicles like the one we're on right now. And they've been doing it for a long period of time. I'll give you an example of a snapshot of 51 private investments I participate in. We have come to the conclusion, and these are across multiple sectors, that we're going to be able to reduce our use of commercial office space by around 20% on average. That we are going to allow employees to make a decision that they can remain at home. They may be caring for elderly parents, they may be raising children, they may not want to commute. These include cities all around the world. And even though they participate on a global basis by communicating with software, et cetera, but we think that that 20% reduction includes us supporting higher internet speeds in their homes, providing them with hardware, security links, all of that. And as a result, we're buying all kinds of software licenses from companies like Microsoft and DocuSign and CrowdStrike and whatever, the ones that are the winners I talked about before. But here's what's interesting. We think net, 24 months from now, we will save 7% of cash flow across the portfolio. And when the average business does 15% pre-tax, and you can find 7% savings, yes, at the expense of office commercial real estate, that's a hell of an adjustment to productivity. And I think that's going to happen globally. So the winner there are going to be the operating businesses. And I don't care if you're an accounting firm, a law firm, or you're a manufacturing supplier, whatever, there are at least 20% of your employees that may opt to live and work at home. And as a result, you will be a finer, a more productive, higher cash flow operation. Now, generally speaking, with sovereign funds, they would allocate up to 30% in real estate, long-term, AAA office, commercial real estate, et cetera. And certainly that was my profile in terms of what I invested in as a portfolio. I have reduced that to 8%. I have sold all my REITs. I have moved out of that space. I think they are going to be impaired for the next 3 to 5 years. I speak with my counterparts in places like Dubai, and and off the record, one of them said to me, who is one of the largest landlords on earth, we have had a phenomenal run for 18 years. Now we're going to give some back. Those were his words. So that's a sector that is impaired versus so many others that have come out of this in a much more productive and more profitable way. So all these jobs we're talking about, the 32 million unemployed in the US, what percentage are actually just being furloughed during a period of forced closure? What are permanently lost? My guess is that it's 20% that are permanently lost as a result of being small business operators in things like restaurants that can't survive when you have a new socially conscious. The Swiss are now removed a third of the tables out of their restaurants, so it makes it hard. They have to raise prices, obviously. But my point is, probably of that 30 million, 22 million are going to get their jobs back in 18 months, which is why the market is not yet thrown in the towel on the economy. So I remain optimistic, except for real estate.
Alain, weigh in on this one in terms of the optimism there, because you've managed, frankly, because you've kept MOF in a fiscal position that makes it possible in a sense, but you've also managed to reallocate staff quite significantly during this downturn. Where do you see this headed? I mean, are you going to keep those people on forever? I mean, how does this work in a very practical sense for you?
Look, I think there is absolutely a school of thought that I can very easily subscribe to. I think what Kevin is saying also makes a lot of sense. But there is also another end to that pendulum. So it could very well be that, it could very well be the opposite of that. So in my opinion, we have to hope for the best and work for the worst. The reality is, when you lose your job for 12 or 18 months, and then you get back your job, that's a big issue. And that's a big disruption. And we're seeing that on hundreds of millions of people globally. So it could very well be, and we are seeing, to be also perfectly fair, we're seeing some green shoots of people coming back to consume within all the constraints that we currently have. So we've seen, so the economy, for example, in Dubai and the region has been more or less open for the past 3 weeks, and now we're in the 4th week. And you've seen how things have been progressing. I would say the progression between when we started, which is 3 weeks and a half ago, and where we are today is about 40% increase compared to where we were. So there is an increase. Things are improving, but it's going to be, in my opinion, a long swish. So people will have to be able to go through that long period and go through that marathon and have the ability and the strength and the grit to get through that. And I don't think that will not have very severe economic consequences. That's my view. That's a reality. Now, of course, this is why I said you have to have built up liquidity. It's going to be very difficult to do it now. If you haven't done it, then you have to deal with the new reality. You absolutely have to preserve your cash. I think there are great opportunities that will come. A lot of industries are being disrupted, will be disrupted for a while, some of them permanently. Some of the trends that we're currently seeing, the one thing for sure, we don't know if these trends are short-term, medium-term, and which one will be long-term trends. It's going to be very difficult to say for sure before a vaccine is made available and see how people are going to come back and consume. The other reality is people have been spending in the past 3 months a fraction of what their disposable income was. And people so if you take someone who has not lost their income, they're suddenly saved much more money than ever before. Consumers are going to think, well, how do I want to go back to consuming, and where do I want to go back to consuming? So the cost of doing business, we know for a fact, is going to go up because of social distancing, because of all the measures that are there. We also know that people are going to be much more value driven, and that's going to be questioning a lot of what they used to do that suddenly becomes less important. Case in point, business travel. Is business travel going to come back the way it was? I give you an example. My personal business travel, I used to be a very frequent traveler. I used to travel a lot. When I look back at my diary about last year or the year before, I think 1/3 of my travel will only come back. And I could very well and even be much more efficient. We're going to see that across the board, in my opinion. And that is going to have that is going to elongate the switch. That's number one. Number two, different countries are going to deal differently because the engines of growth are different. So if you look at our region, we know that the engine of growth is to a large extent public sector money and basic government spending. The major income in this part of the world is going to be strained for quite some time. So you have at the same time piling debt, let's say public sector debt, corporate debt. You also have at the same time deficit that's becoming like enlarging more and more and more by the day. We have long-term revenues either from the private sector contribution to GDP or public sector that are going down. So the reality is it's very difficult to see, I would say, a big shift from that standpoint. And it might take some time for people to internalize it. I agree that different countries will fare differently depending on their structure. And I think the ones that have built a resilient private sector contribution to GDP will fare much better.
Sarah, this takes us more to the macro question, doesn't it, about what this recovery, potential recovery is going to look like. V, U, or the Nike swoosh logo. How do you see this playing out?
Yeah, I mean, the V-shaped recovery is much maligned, but I think if we really take it literally, that is what we're seeing. For example, if you look at some of the survey data in China, if we look at retail sales in China, then we are looking at a clear, off the cliff, right spike down, and then a sharp recovery. Now, if we come to the US and Europe, where the lockdowns were much more extensive, longer lasting, obviously in China, you had very severe restrictions in Wuhan, but a sort of extended public holiday in other parts of China. But if we, looking at the US and Europe, we can already see signs of that V. Hard data for April were pretty terrible. If we take the US, for example, retail sales, manufacturing, and housing, house building, all off, down month on month by 20–30%. If we look at surveys over the past week for consumer sentiment, for house building, and for manufacturing, then we already see in May quite a sharp pickup again. Now, I think there's a sort of swoosh type V is probably going to be the most likely outcome. And as was mentioned earlier, this is not like the global financial crisis where you had a grinding quarter on quarter over the period of 6 quarters or so of negative growth. This is a self-inflicted recession, and I think we are already seeing some signs of a pickup. If we're talking about longer term, though, what are the trends that we need to watch out for? There's one sort of economic trend that I'd like to explore, and another which is geopolitical. The economic trend is trade. We had, ahead of the US-China trade dispute, returned to a situation finally after the global financial crisis where global trade growth was faster than global GDP growth. Over the past couple of years, that's not been the case. We saw US-China trade really disrupting globalization and global trade. And it seems unlikely that we're going to get back to strong trade growth anytime soon. All the data so far have shown, even in countries in Asia where domestic demand is strong, that exports are very weak, exports quite substantially still. So the trade story is going to be different. The global supply chain story is going to be different. We're going to be seeing just in case inventory management rather than just in time, shorter regional supply chains. We're probably going to see greater transparency as well. Supply chains have become very complex to such an extent that some firms were unaware of their exposure to different countries or suppliers. So we think that this is a trend for the medium term when it comes to is not in a place at the moment. I don't think that that's going to change anytime soon, no matter what happens in November in the US.
I want to pick up on that actually with Kevin, because I think it's really important
that with such a big upheaval.
I just wanted to interrupt in that, because I think that there's something that to what you're saying, definitely, in the sense that we're talking about geopolitics. We're talking about the next phase of what this pandemic has really brought to us globally. It's not just economic, it's the fallout frankly, from what we're going to see. It's geostrategic, it's political, and it's frankly military as well. It's as nations decide to change potentially their strategic goals as a result of what they can achieve now, with the problems with supply chains and other things. Kevin, I want you to weigh in on this one with regards to the G20, in fact, which is coming up, hosted by Saudi Arabia in November, around about the time of the US presidential election. Donald Trump, the unintended consequences. A phenomenon himself has finally come up against a phenomenon that he can't even seem to score a hit on. And that's, of course, the coronavirus at this point. How do you see this playing out?
I like to look back and try and find in history similar situations. I'm a bit of a policy wonk to try and find other eras that faced similar issues and see what the outcomes were. And I do that as an investor. I think it's prudent. I would suggest, and I think we should discuss it here, and certainly it's going to come up in the G20 meetings, even if they're not done person to person, then they're done virtually. We have a 1,000-pound gorilla in the room that we have to start discussing. This virus has caused unprecedented economic damage, trillions and trillions and trillions of every currency you want. Doesn't matter, it can be dollars or Swiss francs, British pounds. It's unprecedented, the cost, let alone the cost of human life and suffering. Most people that died from this virus died in isolation alone, being old. I can't think of a worse or horrific outcome. And as a result, populations in every country, and let's focus on the G20, want to talk about the future, how to avoid this happening again. Now, for lack of better nomenclature, I'm going to call it PAP, Pandemic Avoidance Protocol, that every country that wants to contemplate trading with another or wants to be part of a group like the G7 or the G20 or the ILO or the United Nations or the WHO, I predict over the next 18 months, this dialogue will become paramount. It'll be at Davos, it'll be everywhere they go. Their populations want to know how to avoid this going forward. Nobody wants to die alone in a bed under a plastic tent with a tube shoved down their throat. That's basically how all these people died. Horrible. And as a result, we have to start asking ourselves, how did it happen? Where does H1N1 come from? Where did SARS make its transmission from one species to another? Where did coronavirus come from? And I'm not pointing a finger at any country. I'm saying the protocol will be adopted by science. In other words, if it's true that you consume a species raw and that's as a result, a virus can jump into the human population and cause incredible pain and suffering and economic devastation, shouldn't that be addressed? And going forward in groups like the G20, shouldn't the protocol, the PAP protocol, be agreed to universally? And should a country over and over again be the origin of a devastating virus that strips the globe of its economy and causes hundreds of thousands of people to die in a horrible way, what is the cost of that and who pays? This is no different than the dialogue that occurred after World War I or World War II. In repatriation of capital from victors versus those that suffered, it's the same discussion that's going to happen. PAP has to be adopted. I don't know one single person of any nationality in any geography that is not asking their government, how do we avoid this ever again? And should a country be one that continually adopts policies, whether they be wet markets or cultural use of diets that obviously have viruses jump, not naming any country, could be any country, but if it's consistently the origins of such human suffering, they're going to have to pay. And you will see that become a paramount issue in the US election, in the G20, in the ILO, at Davos, in the United Nations.
We're talking about reparations. I mean, well, I'll throw it out there. You're talking about China. And I think that it's very important that as the World Government Summit, we're open to talking about things that make people potentially uncomfortable, because it shouldn't be politically incorrect to name names and to talk about things in an open society, which I think that we all are trying to be part of at this point, especially when something like a global pandemic can bring us all together so quickly and so immediately. But in terms of what happens next, I mean, reparations, what would that potentially look like? I mean, I think there'd be a lot of pushback globally. I mean, who would that be led by? Would it be led by the UN? Many people would say that the United States has taken a significant step back in the last several years as the leader of the free world, as we used to be called. Are we still called that? You know what I mean? We need to think about that in terms of what the dialogue would look like. What's realistic in terms of this kind of protocol?
The protocol would be adopted by all countries of the G20, and you may never get resolution to this occurrence, but the whole point is going forward, how do we make sure this doesn't happen again? The leverage now is, and you know, you're a better politician than I am, but you're right, I am talking about China. I would tell you right now, their brand has never sunk as low as it is right now with all their trading partners. Everybody wants an answer on how we avoid this ever happening again. And if you speak to scientists and ask them, where do these viruses originate? The majority of them are coming from China. This has to stop. Now, as a result, whether we resolve this particular virus and the trillions of dollars it's cost is a very important issue, and it may never be resolved. But my point is, if the G20 adopts it into trade policies and makes PAP a policy that has to be adhered to, these organizations are powerful. Countries want to be part of the G20. They want to be part of the United Nations. They want to be part of trading partnerships. They want those things. And if they're continually shunned, there's a huge cost. Their cost of capital goes up. This 1,000-pound gorilla has to be dealt with, and it's going to be a discussion that starts in Riyadh just months away from now. And it's going to be a huge issue in the American election. Watch it happen.
No doubt about it. Alain, weigh in on this one from the micro level, in the sense that obviously China is the biggest foreign investment partner of the UAE. It's something that I've talked about frequently with His Excellency Yusuf Ateba as well, and what that means to relations with the United States, how we're seeing that play out across countries here in the region, Saudi Arabia, UAE as well. For your business, in terms of adopting those kinds of protocols, how tough is that? I mean, from supply chain to the floor of the shop, what does that look like for you?
Look, I would say it's not tough as long as we are going to be dealing with the outflow and bring back trust. That's going to bring back people and basically push consumption again, and basically the economic flow. But what I'd like to say here is that I agree that this is a big conversation, and I think it's very important to understand what happened. But the point here, what happened is not only where did it come from, it actually why did it spread so much? And what happened afterwards. We know that the super predators are there. We know some decisions were made or not made, etc. And actually, I don't think it's enough to say it came from there, so that's a problem. Not that am I saying that Kevin meant that, because the point is there is much more of where it originated from. The next one could very well come from Europe or from the US or from elsewhere. And I'm not saying there hasn't been anything right or wrong done here or there. The reality is the world needs to understand what happened and how did you find ourselves in this situation, and why certain countries found themselves in situations that are much worse than others. So we can't just take, in my opinion, the event that happened and forget the lack of investment in healthcare infrastructure, forget decades of going in a certain direction where this kind of pandemics were to a large extent notionally, conceptually understood, but practically ignored. And the next pandemic may very well be in 6 months from now. So I think this avoidance of pandemic or pandemic avoidance protocol makes a lot of sense. We will have to go back to a great deal of multilateralism, which is very different from what we were going a few years back or in the past few years, in order to come back and bring every nation around a new protocol on how we deal with pandemics, how we deal with global crisis. So suddenly we're going back to people and say, we need you to come back to the table to have a conversation that's actually is quite different from the conversation we're having 6 or 12 months ago, but we also want we want to hold you accountable for it more or less. I think it is absolutely a moment that's very similar to post-World War II, I agree. And I also believe that we are going to have some very serious conversations, and you're going to discover things that might be things may not be as much as the way they look like. This being said, we need to think differently and out of the box. That's a fact. On the other side, we also have to think about the new pandemics. Are they going to be cyber? I mean, this pandemic stopped us. We shut down to deal with it. So we just stopped the world. The new pandemic can take us 200 years back. We're still able to have a conversation over Zoom. Imagine if there is no internet globally. Imagine if there's no electricity globally. What does that mean? What is the value of all of our businesses and all of the markets and all of this wealth that's been created and all of the economic fabric? We never thought that a virus would do what it has done. and how much health sustains the global, I would say, the economy and basically our productivity. Today, we might have some other things. So there is absolutely a need for avoidance of new pandemics, but these may be health, maybe something else. On the other side, I think from a business standpoint, at the end of the day, it boils down to two things. Trust, in my opinion, to how people coming back, and then resilience on top of efficiency. We've built a word for efficiency. Today, what matters the most, in my opinion, on top of efficiency, we can't forget that, is actually to add a layer of resilience and make sure that whatever we have works when we need it the most, and move from value to worth.
Sarah, weigh in on this one in the sense that how worried are you when you look at this from the conversations that we're having right now in terms of reparations, in terms of, you were talking about what happened after World War I. Obviously, that led us to World War II. We talk about the end of World War II. We talk about a Marshall Plan that was necessary, frankly, to get Germany back on its feet and Eastern Europe back on its feet so that we would not have the conflicts that we had previously. Post the Great Recession, we were able to see that populism had, infected countries globally. We saw that reflected in their elections and policies, et cetera. One of the fears that we've been hearing as we take interviews across not just the region, but from military leaders as well, the conversation continues to revolve around how the strategic interests of major countries are changing and what that could do to the stabilization of regions just like this one here in the Middle East. What's their greatest concern that you feel when you hear these kinds of dialogues?
Yeah, I think that there's a really big concern around, first of all, maybe not recognizing how the global economy is moving forward. If we go back 20 years, then clearly you had an economy that was very much dominated by US. If the US was in recession, then broadly the rest of the world went into recession. The power and influence of Europe, going back sort of 20, 30 years, also supremely important. But increasingly now, we're looking at a world where the Chinese economy is moving into number one place. It's in terms of GDP, certainly, the population is there. We're seeing rising living standards across China. And if you broaden out for the region as a whole, China, broader Asia, in recent years has been the dominant driver of global growth. So I do think it's important to recognize that multilateralism has to be the way forward. I think a lot of what Alain said is absolutely on the spot. We have to build efficiency and resilience. And I think that this pandemic has been a lesson about not being backward looking in policy making. So many resources have been plowed into fighting terrorism. We know that there have been sort of pandemic committees in each country, and to a certain extent it was reaching the stage of just lip service being paid to that. One positive that I think will come out of this episode is that we now have an example of how life can change very dramatically with very little warning. And the hope is that with that knowledge, we will think about the various ways in which that can happen in the future. Obviously, the climate is one area. Maybe people are starting to think more seriously about how, where we're going, how the world could change dramatically if we don't take certain steps now. So these are all very important messages and hopefully lessons that will be learned. But I do think that the spirit of multilateralism has to persist. Otherwise, it becomes much more difficult to prepare for whatever is thrown at us next.
Kevin, you're sitting in the United States, and I've been covering Donald Trump since he was elected, and actually before that. Do you think that spirit of multilateralism will prevail from the White House? Will it emanate from the White House, do you think, at this point?
Yes, with different mandates having changed. If you think about what the dialogue was going to be at G20 only 90 days ago, it was about job growth and entrepreneurialism globally and climate change. Unfortunately, pandemic avoidance protocol is now the new climate change. I don't think we're going to spend a lot of time on what is a very serious matter because the immediacy of dying from a virus has a very powerful political impact in every geography versus the decade-long mandate of changing or maintaining climate initiatives. And that's unfortunately going to be the fallout. I see as far as Trump, I've always concerned myself more with policy as an investor versus the circus that goes on in any countries, whether it be Italy or British, whatever. There's a whole lot of populism now in every country, and regardless of whether democracies or not, and it's more or less irrelevant if you're an investor. What matters is policy. The policy out of this administration was very pro-business, and in fact, the economy was extraordinarily strong in the United States. Unemployment was below 4%, and historically, in modern times, again going back and using history as a guide to making investment decisions, no president lost their mandate with unemployment under 4%. Now, Trump does not have that anymore. Obviously, with 32 million unemployed, he faces another months away, but extraordinarily on the other side of that, in modern times, the American voter has never deposed a president or an administration during wartime. And so an extraordinary outcome would be that he wins again, not because of a booming economy, because it's a time of turmoil and people like to see the same people's faces, assuring them of the future looks brighter, which is exactly what's happening on American television today. There is no discussion of the election. It's extraordinary. There's nothing going on in terms of making that decision. The point being, as an investor, you say to yourself, okay, if he wins again, that means policy remains the same on a post-pandemic world of recovery, whatever the time frame is, which is extraordinarily good for markets. And that's why you're seeing markets, some indices, as I mentioned earlier, the technology indexes of like OGIG, those things are up 20% on the year. They're not even down. They're actually ahead of the market. So I look at it and say, okay, if that's going to be the case, what will the relationship with China be like? As we just discussed, they are going to be the largest economy in 20 years. This pandemic avoidance protocol is going to find its way into the trade agreement, as it will be discussed at the G20, I'm sure. And we will find a new way to cooperate because it's in everybody's mutual interest to avoid this happening again. Whether you're China, whether you're the Middle East, or whether you're in Asia, doesn't matter. This goes beyond local politics. This is about life on Earth. And I think it does, unfortunately, replace the dialogue that was going to occur in other mandates like climate change.
Alain, you're one of the largest employers across this region. And obviously here in the UAE, the government's been excessively proactive in a very positive way about making sure that everybody's getting tested, the availability of testing. There have been several changes, frankly, between Abu Dhabi and Dubai in terms of when things are opening and when things are closing. And even overnight, we saw some new restrictions put in place that sort of reversed previous mandates from the government that obviously impacted your business specifically. But in terms of governments legislating, putting people back to work, we all understand that everybody at some point has got to go back to work. They may go back to work differently, but they've got to somehow go back to work. It's a tough call for governments to essentially say to people, you're taking your life in your hands.
Yes, in a way, but governments are not only saying that. The government, they're also giving people basically clear guidance on how they can preserve their lives. And they're telling them, I am today responsible of your life. I'm asking you to stay home. Once I'm telling you, look, now I'm giving you back responsibility. Your life is in your hand, and this is how can I support you and guide you in order to preserve your life.
What I'm saying is, at some point, the leaders have to make a call there and say,
no, of course. But what I'm saying is
for the health of the economy.
Absolutely, and they're giving people also the tools to help themselves preserve their lives. But what I want to say also is that we've seen that across the board in every country that is opening back up. Okay, we are seeing a difference of opinions about what is the best way of doing it. And we're seeing local governments everywhere, whether in the United States or in Europe or in Asia, anywhere, that are saying, we think it should be done this way, it should be done that way. I think there is a dialogue that's happening there, and sometimes the local pressures and the government pressures are a bit different. So personally, I think that we have had a great way of dealing with this pandemic here, and it could have been much worse than what it currently is. I think we're extremely lucky to be where we are. That's on the one side. On the other side, people will have to come back to work, and they will have to make sure that they take care of their own lives. And this is why I believe that the guidance that's being given, and going back to Kevin's example about Switzerland, people just trust their government enough to know that this is the right thing to do, even though it may be an inconvenience for me. But also, generally speaking, going back to the region and all the dynamics that will happen later on, I think that a lot of what we're talking about will be shaped by the level of pragmatism that we have seen, and that we can see, for example, in the White House or the US. We've seen great ability to actually be pragmatic and deal depending on on the priorities of the agenda. So I don't think that the future is going to be just basically same as before. It's not going to be just a replica of what happened. I think there has been, and we've proven, ability to actually shift gears, ability to deal pragmatically with new situations. And I think what we are going to see will require that. So I'm not, in my opinion, in my personal opinion, I don't think that it is doom and gloom from that standpoint. What we have seen, what worked may not work, but I also think that we're going to see a big change in terms of how we deal with the post-COVID-19, in terms of this global response that is needed, and also the great transformation that the world is going through. I also believe that people will make their choices going forward very, very, very differently.
I just want you guys to weigh in as well. We've gotten several questions from the audience, and I just want to have the chance to go for a few of them. Kevin, the first one to you, obviously, putting on your investor hat, your Shark Tank hat. Walk us through how you see Silicon Valley evolving from this pandemic. I mean, obviously, we talked about Zoom briefly, the company no one had ever really heard of, and now it's the name on everybody's lips. Where do you see the winners coming out of Silicon Valley, and how does it change the landscape there, do you think?
I think communications-based companies that work on communications protocols and obviously security are going to be very valuable. It's, companies that allow, and Microsoft's a good example, that's an old technology company that morphed itself into a license that every one of my companies now standardizes on the Microsoft platform to work remotely. We have purchased hundreds of thousands of dollars of licenses each month to do that, and other companies as well. And so the technology is reflected in market capitalization now, is the leading sector. But I think there's another sector that's going to benefit from this, if you can put a silver lining on a horrific outcome like a pandemic. The healthcare sector in every country is going to change. Supply side logistics will return and become a part of national security. The US, for example, did not have enough tests, and everybody knows the story about the masks and everything else. That'll never happen again. It's going to return all of that manufacturing, the pharmaceuticals, et cetera, back. And as an investor, putting my investor hat on, the combination of technology and medical science is probably the most exciting area. And indeed, for me, in replacing my 30% investment in real estate, I've now invested in healthcare and healthcare logistics in countries like Canada, where they've had a collapse in their currency. It's down 30% because they used to be an oil-based economy, but many of the supply chains that will service North America will go to Mexico and Canada and the United States. But Canada has a very educated population and can manufacture pharmaceutical supplies. So my overweighting now is in technology and healthcare and bioscience and investing in any company that I can find that is going to domesticate the medical supply chain. I'm looking at all kinds of deals now for setting up manufacturing of both vaccines and longer-term pharmaceuticals. But every country is going to do that. I mean, again, using Switzerland, they're the ones that are always ready for everything because they think ahead. And I'm not a Swiss citizen, but I admire the way they run that country. And I think we could learn a lot from what they do, and I think we will. So I'm very excited as an investor with those changes of sectoral. I've moved out of utilities because I'm worried about inflation. I've gotten out of any long duration government bonds. I'm worried about inflation. When you pour $4 trillion out of a helicopter into the American economy, you're going to get some inflation down the road. So you want to own companies that have pricing power. That's where my head's at as an investor.
Alain, what's the biggest worry for you, not just as an employer, but frankly, as someone who's wearing many hats, and real estate also from off is one of them. But in terms of rescaling the ability of your workers to do this to be able to function in this new reality, retraining them, how significant is that going to be to your business? And how do you think you're going to be able to do that across the board?
Going back to resiliency, I think this is about how do you drive more resiliency in your workforce. I think people now have gone through a great learning experience. We have all gone through a great learning experience that we never thought possible. And we, for example, reskilled more than 1,000 of our colleagues from the cinema business to our Carrefour business. That was great. It was a great experience. And also this talks about the resilience. So going forward, people will want to be able to do more than one thing because you don't know what's going to happen. And people will always remember what actually happened here and how they've been able to save their jobs. So reskilling, upskilling has never been something that is as relevant as it is today and will be much more relevant in the future. But this for me is quite similar to the conversation I think that you were just now having with Kevin about localization of supply chains, et cetera, et cetera. We also have to remember that there is a cost implication. We're going into a world where value is going to be much more important. And the reason why supply chains got globalized is because there was economies of scale. So now if we abandon economies of scale and go back to basically localizing everything, this means that things are going to be much more expensive, which is a good thing from a resilience standpoint because you have it available to you if something else happened. But we cannot build the future just to replicate what you see in the 2-3 months that happened or what you will see in the coming few months. We'll have to build a future that's actually much more agile and resilient. And we have to use technologies much better to be able to produce what we need when we need them, rather than localize the supply chain in the traditional way of doing things. We'll have to make sure that the supply chain, going back to the concept of multilateralism and the avoidance of pandemics and so on, getting to a point where supply chain becomes sacrosanct. We don't touch that because this is about what needs to happen, and people have to take that in the way they look at policy making going forward. I think this pandemic has also brought to bear that no one can win alone. There is no country that's mighty enough to be able to deal with COVID-19. A lot of countries told COVID-19, you're going to stop at the door. It actually did not stop at the door. There is no one that has the might to deal with this kind of situation. So working together better is not a choice. It is the way forward, whether we accept it or not, whether our local politics allow us to say it or not, that's the reality going forward. We also need, and you have a great opportunity, to make sure that we use technology much better to be able to produce what we need locally. Think about 3D printing, think about other things, rather than destroy or basically disrupt with much more localized supply chain that will drive cost up. At the same time, there is a need to drive much more and much wider regional champions. We cannot continue to have a world that's bipolar economically. We need to have much more and much bigger regional champions. And this is not the fault of the two greatest economic power today. It's our role and the role of others to make sure that that actually happens. I think this is extremely important for the resilience of our global economy going forward.
No doubt about it. I want to bring in a couple of questions. I'm going to merge the two. One was from Australia. The impact of liquidity issues over the next decade, how they're going to impact humanitarian spending. I speak to folks on a regular basis, whether it's the Red Cross or UN humanitarian relief, talking about how worried they are about supporting the people that they're already under a great deal of strain to continue to supporting, whether they be in refugee camps or elsewhere, who are most at risk at this point, given the fact that governments are tightening budgets. Sarah, I wanted to ask you this one specifically, coming from Australia. Do you think we're going to see, this question says, do you going to start to see countries moving away from their promises about reassigning cash towards organizations like this, or cash towards growth, as a result of what we're seeing, just strictly from a liquidity standpoint? They're just not able to make it work.
I mean, there are big challenges for governments ahead. As we discussed earlier, they've really thrown everything at this crisis, and the sort of day of reckoning is coming quite soon. already governments are thinking about how they sort of redress the imbalances in their public finances over the course of the coming years. And unfortunately, I think that spending constraints are also likely to be, to affect humanitarian and charitable giving. So that is something that I think, if we look at it though in a sort of foreign policy perspective, and we've discussed at length the challenges that the sort of global geopolitical situation presents, for governments, maybe for the G20, there are going to be clear needs to ensure as far as possible that we don't see populations and parts of populations suffering extensive poverty. The question of populism is very much there, and I would argue that the threats around populism have risen, and we're not really talking about that very much with other things to worry about currently. But as an after effect, this is a threat that we may have to face. And for governments, it makes a lot of sense to ensure that funding is directed to underpin incomes of the poorest. There's a generational issue here as well. For the younger generation who've had their education disrupted, who will find that the workplace is just not so welcoming, that jobs are just not available at entry level.
I think we lost you. Do you want to continue? I think we lost Sarah. One of the questions, though, I think that is really important as well, off the back of that, frankly, and to some of the questions from our chat, will Europe see another great migration crisis as a result of this? I mean, when we continue to talk about people who are unfortunately able to make ends meet, or those people living globally beneath the poverty line, how are governments in Europe, frankly, going to cope with potential of another migrant crisis? I mean, are they prepared to do that? And in terms of what happens next with regards to the US economy specifically, Kevin, I kind of asked you this a little bit earlier, but I'm going to go back to it. When you think about what happens next with regards to Q2 numbers, those are projected to be pretty dire. And we're talking about, 26 million plus Americans out of work in the years to come. How worried are you about the fact that at some point governments globally and in the United States, at the local level, at the state level, are going to have to make a call about putting people back to work, whether it's safe or not? I mean, how do you see that playing out realistically? Because obviously, sitting out here in Abu Dhabi and our audience, obviously a global one, we're seeing the stories coming out of the United States.
Right. Yeah. So that discussion is occurring in Washington right now on a point of policy regarding limiting businesses' liabilities. The concern right now, and this may require a different kind of package from government that is not an economic package necessarily. Obviously, you're aware of what happens is the United States is a very litigious society. A lot of contingency lawyers are waiting for businesses to open so that claims can be brought about catching the virus in such and such a business and forming class action suits. The likely outcome for returning to work is that the government puts a moratorium on that kind of claim. And I think this will happen in more than just the United States, to give businesses a chance to get back on their feet. And as my colleague just mentioned, making it an individual's decision as to whether they want to work at home or go into an office, and take protocol, whatever that protocol ends up being, that countries agree to, because we're going to have that, whatever that PAP protocol ends up being. An individual makes that decision, they go back to work. If a bad outcome occurs, the business is not liable. So that has to be passed. I will make a point regarding it is close to 30 million unemployed now in the United States, that these are, as I mentioned earlier, probably majority furlough jobs that will come back at some point. They may not be the same job, and yes, there is permanent impairment to the amount of income or the money they had in their bank account. However, I anticipate, and being the eternal optimist as an investor, the technology that has been forced into play, into work, into businesses, into people's homes, is going to provide remarkable productivity. I wanted to note that yesterday, Cisco's CEO, the company that provides WebEx to the world, is highly used by governments as a secure form of communication, was showing how many hours of time people are working, in some cases 10 hours a day, even on weekends. There's a tremendous boost in productivity as a result of forgetting the 9-to-5 protocol and simply working because you want to or you have to. And so I'm kind of in a place now where I believe the American economy will be back probably within 18 months to within 85% of what it was, with different sectors being the more successful. Healthcare being the number one if you're an investor, and technology number two.
The Congressional Budget Office, though, their latest numbers saying that Q2, we're likely to see a 38% drop in U.S. GDP. I mean, that's a...
Hadley, nobody cares about the earnings or the numbers for this year. It's a write-off.
Because it's already a wash.
It's a wash. Whether there's any S&P earnings or not, nobody's investing for the back end of this year. We know it's a loss. It's when does the economy return? And right now, being an optimist regarding virus technology and medical science and biotech, I say we'll have either very strong therapeutics or inoculation within 18 months. And that is what I'm investing for.
And Alain, obviously, you've done a major shift within Majid Al Futtaim over the last couple of years under your leadership towards AI, towards making things much more efficient. Obviously, that has a lot to do with the success, frankly, that you've seen off the back of this pandemic, in the sense that you have multiple warehouses. You're doing a lot more with your apps with regards to Carrefour, obviously. Walk us through how you see that impacting this place specifically in terms of the region, because we have such a higher internet penetration rate than we did previously. How does that change the game here?
Look, I think there are two things. One is we have such a great opportunity today that everything is actually accelerating. And finally, going back to business, and from a business standpoint, we finally have a market. One of the big issues that were actually slowing things is the fact that it was a lot of investments and very little returns, if not actually losses, on the short to medium term, because the penetration wasn't as big. So as much as we had we had the highest internet and mobile penetration in the region, the size of the market wasn't there. And it is a bit of a chicken and egg. What happened today is a blessing in disguise, if you want, in terms of how do we grow this market and how suddenly things become different. And I've given multiple times, the how in Saudi Arabia things move 1,400 times in terms of growth, or in the UAE we are at about 300%, or Egypt 730%, and so on and so forth. So there is a much bigger market there that's more interesting, and this is definitely the future. But what I want to say is, all of that is great. What we need to empower that is a much better governance and a much better global governance. I think the question from Australia and what you touched on, these costs do not have to exist. We do not have to have humanitarian crisis. We do not have to have migration crisis if we had a better governance. All these are the costs of poor global or regional or country governance. And I think this pandemic, one of the big issues that basically come back to the front is that we need to think long-term. We need to preserve the strengths of short-term capitalism, but we need to look at long-term capitalism. We have a right to ask our governments about the quality of their governance. And all of these things do not have to happen. They happened. We're all humans, but the reality is we need a much better global governance and local governance. And then technology, all of what you're talking about, can be much more empowered. So a lot of what we deal with today, a lot of the cost that we bear, or the lack of, I would say, growth that we don't get, especially if I think about this region, but even globally, is driven by actually poor governance. And this is not a fate. This is not something that has to happen. It is something that we can change. And I think this pandemic is bringing back to the table a lot of very important topics that you have to deal with seriously. And you can't just continue to kick the can down the road.
I'm afraid we're going to have to start wrapping it up. But one final question to everyone, and I'll kick it off with Kevin because he's already kind of weighed in. How soon are we going to see a recovery start to take shape? You said you're an optimist, but this year's is a wash. How quickly would we see that moving, Kevin?
Well, I think, I'm looking at it just from fund flows as an investor. We've already seen a remarkable recovery in Asia. China is ahead of everybody along with South Korea. Europe is about 5 weeks behind them. And here in the US, we are about 90 days behind in terms of opening up. The only difference being there'll be sectors, and I think it's universally agreed, if people are not going to be comfortable going into sports arenas anywhere on earth until there's herd inoculation. I mean, you're just not going to do that. So there are sectors like that that will suffer, and real estate around giant stadiums globally has already dropped in value until people feel that not only have they been inoculated, but they don't have the risk. I will say one thing though, that my guess is humankind will learn from this and have a different protocol in how they adopt healthcare issues. It's occurred to me that the coronavirus, I've learned, as many people around the world have, is also the virus responsible for the common cold. Well, I don't want to get a common cold even. So how do I avoid that? Will we all be societies that wear masks? Yeah, maybe. Will we all have social distancing going forward and adjust pricing for restaurants and gathering locations? Yeah, probably. And in a way, be better off for it. I'm an eternal optimist that human beings figure things out from experience. If they don't like the experience, and I certainly know they didn't like this experience, they change policy globally. They do it because they have to, and that's why I keep referring to this PAP protocol having to be start the discussion now. Even if there's no remuneration back for what happened, going forward we'll work more cooperatively. And I would say that the global economy will be back on its feet within 24 months, and that's certainly my investment thesis. And I've remained long equities, and I am hopeful that, and I do invest globally. I'm an optimist. I just see that we are going to learn from this and be better off.
Alain?
I agree. I think it's an 18 to 24 months. Some industries will fare better than others. For them, some industries are going to have great growth within the coming 18 months. But I think from a global and macro perspective, it's an 18 to 24 months if we do the right things at the right time.
Sarah, you're the expert. We're bringing you back in. We're so sorry you got cut off.
Yeah, I mean, we're already seeing a recovery of sorts. So the question is, do we get a knockback in a couple of months' time? I think if we can, make it over the next few months, then we will see ongoing improvement. People will start to get used to social distancing, will adapt accordingly. Some businesses will recover. Some businesses will be on the back burner for 12 to 18 months. Others won't survive. But we are already seeing some signs. I would say that in terms of the economy, we are past the worst in terms of activity, but probably not past the worst in terms of unemployment.
If you were to put this into a stages scenario, are we in stage 1 of the recovery now?
I think so, yes. I mean, we look at it on a month-by-month basis, and we would say that for the West, April was the month of the deepest downturn. Every country was in pretty severe lockdown. For Asia, parts of Asia, that happened earlier in the year, and we already see that they've moved into stage 2, or in some cases stage 3, where many restrictions are being lifted. People are starting to return to restaurants and cafes. Certainly those are the reports that I'm getting from some of my colleagues in China now.
Great stuff, panelists. Kevin, Alain, Sarah, thanks so much for joining us. I'm going to hand it back now over to Reem.
Thank you, everyone. Thank you, Kevin. Thank you, Sarah, Alain, Hadley. That was such an insightful session. I think all of us are leaving here today knowing that we had people log in from the States, from Europe, from Asia, and all over the world. And I think all of the people who've come in to log on to the session is just a pure example that we definitely need collective action. We need to work on better global governance. And together we can actually have progressive, optimistic, and positive change. Thank you everyone for joining us today, and thank you for such a lovely session. It was really insightful. And for everyone who's logged on, we will be having further sessions. You can stay tuned and find the links on our website. Thank you so much, and everyone stay safe and take care.